You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, Quasar crew. It's Thursday, October 28th, and we're live with caffeine and the chaos. Futures are flat to mixed. The S&P and NASDAQ are trying to sneak higher. The Dow is catching its breath after record runs. 10-year yields tiptoed right under 4%. Oil's ripping higher on new Russia sanctions, and gold, she's glimmering again, Steve, after a two-day sell-off. We got earnings that are moving faster than airline peanuts. We got to get into it all. How you feeling today, BigBeat?
Bad. I think these earnings were not good. I tell you. I mean, look at IBM. Look at the IBM down 7%. This is a stalwart of the United States. Manufacturing companies, yes, but the bar has been lowered. I know you're going to say what you're going to say, but the bar has been lowered so many times. And again, to me, it's not about the past, it's about the future. What are they saying about the future? They're saying two things. Cloud revenue is down. It will be down. They're also saying that there's still some concerns about the future. And to me, that bothers me. So when I see these things, I'm like, no. I just made a post a few minutes ago. If I told you that the combined New York Stock Exchange and NASDAQ, both of them, are now sitting at $61 trillion of market cap. Now, if I told you back right before COVID, that combined was around 30 trillion. Okay? Let's take the 60 trillion, 61 trillion, 60.8 to be honest with you. Add 7.5 trillion, which is the highest in money market money right now. That's the highest on the sidelines. That is all. That is like almost $70 trillion in wealth. Yeah, we still have hungry people. Yes, we still have, we still have problems. How is this happening? So this K economy is not working, and the K economy is also not working because retail is not spending as well as it had been because inflation is up. We've had oil dropping heavily. Thankfully, I called it the other day on the show here, USO. Make sure you buy some oil because I thought that was cheap. At when is it? What, $57 a barrel? It's at 60. Almost 62 now. It's almost a 10% run. All of these things we've been talking about are actually coming to fruition. No, I don't like this market one bit. I have been pulling money off, and I took your advice, Howard. Last night, I went crazy buying Bitcoin at 107.5, that big dip last night, and dumped a lot of that at 110.5 last night. The rips and the dips, it's happening again, right? This is an economy, a market I understand. Right? When it's fully valued and people don't understand the values and they don't understand the numbers, I take advantage of that. So here we are. So yeah, that's kind of my thought process here today, this morning.
Okay, well, let's start where you started there. You know where I'm coming because I told you before we started, gave you the head start there.
No problem.
But you, Michael Litt, everybody I've been listening to, not named Stephen Flanagan on this show, has been talking that earnings were not going to be good. Don't start changing it to forward. You talked about earnings. Earnings would not be good. We come into earnings 9 to 10% growth. That's across all of them, Steve. 87% beat so far. What more do you want? 100% and beats by 20%?
What's the difference here? The difference is AI. If AI was not in the economy right now, the United States of America would be in a recession. And that's not my word.
It is, and it's leading. I mean, again, you are at the forefront of it. You're at the forefront of it.
That's Jamie Dimon's words. That's Solomon.
For everyone, you can go there. I can give you a Bill Ackerman, a Tom Lee, another. So let's not do that game because we both know there's the perma bulls, the perma bears, and there's the people like us that play in between and actually tell you what we think. But you and I, for the first time in months, because this is what I've been watching, and I listen very closely to the experts like you, like Michael, like Peter Thomas. As you know, I write down my little notes, and it was, we are not going to have good earnings seasons in quarter four. We're in quarter four.
All right, so
we are going to see 3%.
Let's look at companies. So yesterday we had Tesla's earnings. Okay, what's price down? Is it up or down?
Its revenue is plus 12%.
Okay, so Tesla is down what this morning? Let's see. Tesla is down, oh my God, almost 4%. Let's look at IBM.
We can go both, but that's Steve. It works. That works exactly. That works exactly both ways. I mean, that's
my job is to make sure that we trade the right way. Okay, so when I say the earnings, first of all, earning beats, yeah, they lowered them to get their earning beats.
I mean, so just the other side of that, Dow is up 7%, American Airlines up 5.79, LVS up 6.28.
American Airlines, I could call Schwab Network.
Honeywell up another 4.23. You know, we can play that game, but it's going to be 50-50.
Whoa. I picked metals and materials. I have been.
I understand, but what we're saying is the earnings, again, as a general sector of the entire pie, have been much better than we all expected, I think.
Yeah,
and guidance has been raised at the same levels.
Yeah, again, they're wrong. I mean, I don't like this market. I don't like it high here. And guess what? I guarantee you. I tell you, I said yesterday, go read 1929. It's the same thing. It's literally almost verbatim how it works. The only difference is it took them 4 hours to get stock prices quotes on the board, and today it gets us less than a millisecond. That's the only difference. It's the same philosophy, the same mentality. FOMO is happening. Got to be in it. Profits aren't really running. There's a lot of companies out there that are failing. I mean, and you're seeing mergers and acquisitions happening at the highest speed ever right now. So no, I still don't like this market. And you know what? I'm looking at IBM now. Oh my God.
You like this market because you like trading the market. You just think it's overvalued.
I think the market's overvalued. That's right. Correct. Sorry for the correction there. I love the trade of this market. I understand this market. I understand this market a lot. This is easy. This might be the easiest market I think I've ever traded in my life. If you're having problems trading this market, then you're not an OG, right? You don't understand this game that's happening, right? You've only seen one way, up the upside, right? You've not seen the other side of this where, oh, well, revenues are good, but the market's falling. Why? Why is the market falling? I'm telling you why the market's falling, because people don't believe the nonsense. And we know the government's not even giving you numbers. It's closed. So this is a great trading time. If you're having trouble in this time trading, you probably should take your computers, pack it up, and spit it out the door, because this is probably the easiest market I've ever seen in my life. I mean, we have hit Tesla almost every single day and probably should have stayed short, right? This is pretty easy market. But here's what's happening.
Well, Steve, most people can't trade the way that you're trading that. You know, the traders we're talking to on this show aren't buying 1,000 shares of Tesla to move.
Oh no, there are. I guarantee
there's some, but it isn't the breadth of the trader. Again, that's the K curve that you're talking to the indifference of. That is exactly how it works. The trader that's got his $5,000 account can't trade that way, can't scalp on a matter of, you know.
This market is not for someone with a $5,000 account. I'm going to be real honest with you. If your account's under 25,000, this is not an account. This is not a market for you. Now that I will agree with you, Howard. Set aside for a little while the big boys fight it out on the up here, because right now, quite frankly, this market is run by algos right now. Why? Because it's low volume, and because they don't really understand the next level of this. So I would be very, very careful. Yeah, okay, go play your zero DTs if you want to go gambling. But if you're looking to invest and truly be a part of the real economy, this is not the market for you. And I don't want to say that because I want everybody trading and having a good time, and I get all that. But I'm being honest with you. This is not a market for the faint of heart. This is going to get really bad and ugly and nasty. And when it does, it's not going to be for the people that have a couple of $1,000 throwing money at a dartboard. That's not going to be cool, right? Or expect to lose your money. And I don't want to be mean about it. And I'm being as honest and down to earth, Southern Illinois that I am, to you, to understand that this market is not a game for everybody in the next month or two. As those people window dress and as they start to move money around. You saw what happened in Bitcoin in literally minutes, right? I mean, it's boom, goodbye. You know, they're liquidating people. That's what's happening, and it's going to happen on the other side of this too, right? And I need to be careful of that.
Absolutely, I agree.
Ron
And
says two sides of that, traders and investors. That's right. He's absolutely right. And the investor side of it, I mean, I'm talking to people this morning, all morning long. They're all saying the same thing. I'm not getting back in until I feel comfortable. They're sitting on the sidelines too, right? They've got their investments. Traders, on the other hand, if you've got an account that you can handle it and you're okay with the short side and the long side, you can handle straddles and strangles and you understand option strategies, fantastic. If you don't, this might not be the market for you. This isn't where you just willy-nilly buy shares of whatever meme stock coin out there. This is not for you, because this one will get you waylaid here fast. And I love those markets because I take advantage of that.
Yeah, volatility can be your friend. We're scalping across the crypto side.
Yeah.
Again, not buying or accumulating, just sort of like you said, we're scalping there. There, it's a little easier because you got futures that give you 10%, 10x leverage. So.
Yeah.
So we got a little lightning round here, Steve. 4 macro stories setting up today's tone. Number 1, government shutdown. Doesn't seem like anybody cares.
Nobody cares. We just saw Hakeem Jeffries get threatened with his life. We just saw Mike Johnson, who is the House. I'm going to say he has been taking a brunt of the problems, but he's now saying that it's all about the Democrats. He's blaming the Democrats. Democrats are blaming the Republicans. It's getting nasty. Trump is blaming everybody, including his own party, and nobody wants to do it. Trump is destroying the White House to build now it wasn't $100 million. Now it's $200 million. Now it's $300 million ballroom. Yeah,
wasn't he going to fire Powell for that, for overspend or whatever?
Yeah, it's a mess over there, and this is not. This I'm saying to you, be freaking careful out there, right? James is saying, I appreciate the dichotomy. I'll post this here. I appreciate the dichotomy between the views. Definitely seems like a dangerous, overvalued market. They're clearly targeting leverage, crypto now high beta growth, but also seems like could have a massive run into year end based on rate cuts and the administration's policies running hot. Path is the question. I kind of agree with that. Yeah, in a lot of ways. But let's be honest. To me, I keep saying it all the time. The path of least resistance is not to the upside. The Powell cuts are already.
Well, I mean, Mr. Flanagan, I'll take his side here today a little bit because, again, there couldn't be worse macro news I've ever seen in my life, basically.
Oh, no,
as you said, our administration is blowing things up left and right. We're sanctioning the largest Russian firms. We're saying to China, now you can't even buy our software, never mind our hardware.
Well,
and some of those have to change, right? He's got a taco over.
Well, yes, he's a taco trader. I mean, be a taco trader, right? I totally agree with that.
Well, that's what I mean, though. I mean, that's what I'm saying, and that is, I would say again, from a guy who doesn't. Well, I do have the number you hit, but that doesn't have $1 million in a stock trading account. You can trade that. In other words, understand that right now there is a lot of bad news, and there are certain stocks that when that comes back are going to pop on that. You can look at those, and in the other way, the ones like Quantum that we're going to talk about next that are up because they're saying they're going to invest in it.
Mentioned that on Tuesday and Wednesday.
That dip, fade that rip, rather. Excuse me. Would be my advice. So that's all I want to say is from both sides you can trade it. Like you're saying,
that's what traders do. We got to take both sides of it. But
absolutely,
but I'm not taking the side of going the north. I just don't see it. Now I say that. My portfolios are all still long. I haven't made any changes. The only changes I've made, and we all know that here, I've done it live on this show, is that I have been moving into materials, which have been doing quite well. I have been moving out of foreign stocks, and I've been moving money into cash, and I'm taking some of that money off the profit, and I am putting it on the sidelines to put it back into crypto. So when it dropped to 107, that guideline there, I was buying and I was dumping at 110. So I am still trading, and that's an easy market for me to understand. But what I don't understand is when if you're saying the cloud and quantum computing and AI, which I've been talking about for 15 years, all of a sudden it's exciting to everybody, and yet IBM just said this morning or yesterday, late last night, this morning again, that quantum computing and cloud computing is a problem. AWS just had a massive outage at AWS for cloud computing. I mean, it's not hard to understand what's happening. I'm just telling people, be careful. This is not a market. This is not a faint of heart market right now.
It's resilient though, because again, Amazon up like 7% since that outage, which I still can't figure out. Like I don't want to try to do that. Hey, and followers, if you could hit the like button, share button, all those things, it helps us set off the algorithms, really helps us reach more people. We would appreciate that. We started to hit on it a little bit there, Steve, but quantum computer stocks went full science fiction on us. IonQ, Rigetti, D-Wave all jumping double digits after the report that the administration is exploring equity stakes in these companies. You know, it's a weird world when Washington wants to literally buy the dip in quantum computing. Steve, are they basically saying make America entangled again?
I mean, read the book 1929.
You know?
I don't know how to tell you, you know, when our country government wants to start investing into its own private companies, there is a massive problem here. And it's going to get nasty.
I mean, I have a question. You know, we'll have to ask Mr. Litt, who has the connections into these type of things. Is this the runaround because they won't give him a sovereign fund? He's just making his own? Because we know that was one of the things he talked about, right? He wanted to.
Very good point. Listen, I believe the president's right on this. There should be a sovereign fund. There should be.
I firmly believe in it. We should be investing the same as others.
Correct, and we have the money to do that with oil and the resources that we have as well. We should, but the president making decisions on what company we invest in. I mean, oh my God. I mean, this guy's gone bankrupt how many times? 11 times in the history. Why the hell would we
that far? I was hoping Mr. Besant and Mr. Lutnick were helping make those decisions. I
mean, I have to look at the number of times Trump has gone bankrupt.
Do
we want him picking stocks? I don't think so.
We are 10 minutes from the open. You know, again, it's a tale of every 10 minutes it's something different, because we were up nicely here in the pre-market earlier, and we've been sliding most of it. Now down about 21 basis points on the NASDAQ. The S&P pretty flat, and the Dow slightly up to start the day. VIX above 19 or right at 19. We mentioned gold has rebounded nicely to 41.41, so that 4,000 did hold I talked about yesterday. Silver trying to get back up to 50 for Mr. Steve, and Bitcoin back at 109, like he said. Steve saw our first sort of calls backing up my call for 100K by Standard Chartered. They said we could see it this week. They said it would be short-lived, but watch for a dip down to 98,100 level. Standard Chartered said that.
Yeah, well, Standard Chartered hasn't been right about a lot of things, so I'm okay with that one. What do I
mean, that's the level I've called for. I mean, that's the healthy reset to the 200-day MA, and healthy reset to where long-term holder, short-term holder ratios of profit is.
I'm keeping money on the sidelines just in case that does happen. Again, be prepared. That's what I've been saying this. Prepare, because it's coming. Now, is it coming tomorrow? I don't know. My crystal ball, which is sitting on the side of my desk, is still broken. It's been broken since I bought it.
Already, man.
What's that?
Can you get that fixed already?
No, it's still broken, Howard. You know, I think people don't understand. Like, look, I get it. I understand people want the markets to go up every day. It just doesn't work that way. And I'm happy. My accounts. We talked about this many times. What my accounts of percentages are up. They're ridiculous. But I can't keep saying till I'm blue in the face that eventually this whole thing is going to crater. And when it does, it's not going to be fun. And then everybody's going to say, oh, well, I knew it, while they're licking their wounds and trying to go back to work. I don't want people doing that, right? I want people to invest and invest correctly and trade and have fun and enjoy this. I made a life out of this. I enjoy this, right? But I also, I have been doing this for 35 years, and I don't want to see people get hurt over this. It's interesting, Howard, when you and when I first, for those of you who don't know, Howard and I have been friends for, God, I don't even know. I think I started 2 years. I don't really know the numbers anymore. Dates on my head's along, but it's been over 3 decades.
In the 90s, let's just put it that way.
Let's keep it early 90s, I might add. I've always had money because I always knew how to trade. I always knew how to make extra cash when money in DC might have been tight for some people. It wasn't tight for me. I always knew how to do that. And that has been a lifestyle that I have enjoyed because I've known how to, I understand the psychology of people, right? You're not just finding the psychology of yourself, because you got to get that right first before you can trade or invest. But it's the psychology of other people is what you're also investing, right? So when you do that, you have to think about what is other people doing, even if the economy is not good, which is not. Do they still like the markets? Do they still like, and they're still buying? Okay, well, the market can stay irrational longer than we can stay rational, right? Okay, I know that. I mean, I'm a student of history. I've got finance degrees. I understand it. But when you talk about the next level of this, what's next? What's coming next? Well, this time is different. This time is never different. It's always about psychology. It's always about what people are. Are they scared? Are they nervous? Are they happy? Are they excited? Are they going to the movies? Are they going to drink beer? First time in since the beginning of testing how much people are drinking alcohol, it's the lowest in history, right? These are channel checks that people need to do. And when you do that, when you look at the underlying Main Street, it not always matches Wall Street. Most of the time it doesn't. But when it does, when reality sets in for a lot of traders and investors, when your barber, when your taxi driver starts calling you and giving you tips about crypto, Howard, what's it like, right? We know that's probably the time to sell, right? That's the point I'm trying to make. And I think we're in that point now. I think we're in the point where I'm getting people telling me, hey, what do you think, Steve, about the market? Is it too high? Should I get out? Yeah, I do. I've been talking about it. And guess what? IBM down 9%. Netflix, we talked about it. No. Yes, yesterday, but I thought about Netflix. No, it's down 10% this morning when it was down yesterday, right? Because that's the mentality of happening, right? Yes, there's a rotation. Yes, there's a mentality here that we're moving to AI and quantum. God, Howard, I've been talking about AI and quantum for over 2 years. It's coming. Get ready for it. Palantir at $30. Palantir is 180, right? That's over.
But we're seeing a healthy rotation into Dow, into material companies, things that you've talked about. So, Steve, that's, again, I get where you're saying it, and I fully believe our economy is screwed right now. So I want to start with that. The problem is that Wall Street's run by the 10%, not by the 90%. Agreed. And the 10%, like yourselves, are doing, better than you were. Significantly 100%. For a lot of these people. So that's why, but that's why the stock market, I mean, and I would go to, and I guess we should try to get some of these guys back on that you've been talking with, but Dan Ives has changed his tune. No more Thanksgiving drop. He said we took the drop. A lot of people saying we reset. You know what I mean?
I do.
A lot of people saying that reset. Remember, we hit fear and greed a couple of weeks ago, right? And it was down into the fear level. So a lot of this reset is there, and that's the only thing I'll point out is that there's again a lot of money on the sidelines by your investor friends waiting to be allocated, and it's a question of if earnings causes that, the government shutdown coming out of a shutdown starts that, trade peace with China could start that, end of the war in the Ukraine could start that. There's a lot of things that could restart and get the folks that have the money.
Try to show this chart. I hope I can do this. I'm gonna pull the chart.
Let me just remove that out of there for you.
And I know that's the book and all that. I understand that, but let me show you what happened in 1921. This is what happened, right? People were unhappy. The world's not good. Stock market goes from 107 to about 67. It cut in half almost. Okay. Then from the 20s, they're all excited. It went from 67 to about 100 back. And that happened a year later. That was extremely crazy, right? That's like almost crypto world, right? Where you get cut in half. And then if you go a little bit further over the 20s, all the way up, went to over 300, almost 3. I think it was 351. I think at the top right there. Showing 343. I think it was 351. People were super excited. Everything was good. What are you talking about? They were going to parties even when they knew the market was falling apart. Even when they knew. I'm going to fast forward to the 80s. Here's the 70s during Nixon time. 618 went all the way up to 1,000, almost doubled. So expect these kind of moves. This is what I mean, and I don't mean it's going to happen tomorrow, or expect them. They happen all the time. So here we go again. In 2000. Let's talk about the 90s bubble. It went from what 1,200, 1,100 to almost 3,000. I remember I lived through it. It was freaking like it was manic. It was awesome. And then it drops to like 1,900. So a third of it comes off right at the bubble. But if you held on,
but if you, yeah, I mean, Steve, but what I look at that chart is saying, outside of COVID, every other crash that we've had since the 20s has been not bad. 30% sucks.
People were jumping out of their windows.
You just talked about that run up. You made 50% on the way up. You lost 30 on the way back down, and then it recovered. That's still a 20% gain.
Let me pull the last 20 years. The last 20 years of this economy, right? We know what happened back then. 14,000 to 7,000. Again, a 50% correction. Yes, that was this time is different. The banks fell apart, right? That was a credit crunch. We know that it wasn't a housing, it was a credit.
Right.
All right. Let's just go back here to 2019. One we don't even think it was that bad. 28,500 to about 21,000. That's a third off. That's 30% correction.
That's a healthy retrace.
That's what I'm saying. But I don't even think it's gonna be healthy. I think it's gonna be between 12 and 17%. These are 12 and 17. All of these retraces are those numbers. So let me pull this last year up. Yes, we had a nice pullback in May, and I think everybody was crying, right? So here we are again at the end. This is taking all of the bounces. This is just showing you, if you just left it in as an investor, what to expect. Now I'm going to go back to the all chart again and show you we didn't have that many pullbacks, but those pullbacks, when they happened, were devastating if you didn't get back in. So
well, and that's the thing. Everybody's that would be what I would say. We are open here, Steve. So I do want to get us to the market here. Sorry. But I would say that is what is different today is that buy the dip buyer. I think they will buy. So I do think we're better suited there.
There is money on the sidelines, and I'm okay with that. I understand that.
Tick is slightly open here. James, I don't want to ignore you. We will get back to this question on home builders in a little bit here. Let us just get through the open. But I can tell you, Steve, still very negative on them in general. I'm a little bit more bullish because I think their advantage in rates gives them a better advantage still for the next 18 months.
And just so you know, I am actually taking this dip on Tesla. I'm going to buy the dip on Tesla because I think in a lot of ways that we are right.
Overdone again.
And I'm still trading that dip. I don't have a problem with that, right? But what I have a problem with is people just saying that willy-nilly that we're just going to go higher because that's what we're going to do. And that's just not the thing that's going to happen.
Tick is negative 60 here. Dow Jones opens up down about 10 basis points here, trying to move back up off the lows of the day. SPY is the index opening up slightly positive. NASDAQ down about 9 basis points here. Small caps, actually. Rotation to small caps today. Up about 35 basis points. Gold continuing, well, a little bit of profit taken on the cash open here, 41.41. Bitcoin back above 109. Not really a move either way on the open there. We know oil seen some profit taken, not surprising there. 61.33 on the news. We didn't really get to that. We have now sanctioned the 2 or 3 largest Russian oil companies. And I did see, Steve, that actually has had a decent reaction in that China came out. China state oil majors suspend seaborne Russian oil purchases due to concerns about Western sanctions. So maybe there is a little bit of political win there.
Sorry, I'm looking.
Yep, no, I know you're on Tesla. Absolutely here, sir. Take a look at what else is hitting here.
Yeah, I think the tick now up almost 200 here is a tick up 200 here.
Take a look at the pumpers here.
Keep my eye here on IBM. I'm pushing up here now on that. They're buying the dip there on IBM, as I said that they probably would.
Did see that Moline Healthcare here down about 20%, Steve. I didn't see the headline. Profit forecast cut. So what you're saying there, Molina down 20% here today, Steve.
Exactly. The future is not bright right now, folks. Not liking this sell-off here, though, at Tesla. But I'm going to stay long.
As you said, IBM down 5.77. Dip is getting bought there. SMCI got hit pretty hard here too today, down about 5%. Southwest, the day after their earnings, down about 3.81% here also. T-Mobile, after their earnings, down 2.56%.
Bitcoin trying here, 109.3 here.
Yeah, it squeezes up a little bit higher. Could be a decent fade play later on. Dow now up 9.98% after their earnings.
Materials.
They had a EPS beat of about 38% while they missed top line revenue. LVS, Las Vegas Sands, up about 8.44% here today. CNN breaking that federal investigation into NBA gambling irregularities.
Quite a few of them got arrested and still being checked on, huh?
Yeah. Wow.
We have no indication how these arrests are tied to each other, whether they are tied to each other, but we expect to hear from the FBI Director Kash Patel and the U.S. Attorney in Brooklyn at a news conference that's scheduled for 10 a.m., so a little more than 20
wow.
More details about
coaches, not just players.
Yeah.
That's bad. That's not good for the NBA.
Last time we saw that, Pete Rose, right? I mean,
yeah, this is wow. And that's our boy Jay Clayton being done out of the Southern
SDNY, yeah.
Yeah, New York. It's amazing technology today. As they're talking about it, the way they can figure
James,
this out.
James was asking about home builders.
If you're going to do that, you need to make that that with like a bookie. You can't make that bet with an actual online site where the analytics are used and they look for these irregularities.
What year do we live in, right? Okay, so let's get to James' question here. Any opinion on home builders as rates come down? Yeah, I mean, rates will come down. We know that. They're pretty much right now happening. I can tell you in Florida here that they are building. They've not slowed down. The home builders haven't slowed down. Right now, equity in homes is at a very high rate too as well. But can they afford it? Now, I think what we're seeing is new home builds are being sold, and I think that's the key right now. So home builders will probably do okay because not only that, but they also are themselves. They also can finance your place too as well. So there's a
right, and that's what I was saying. They're able to give you they're able to cut their rates before others can.
Correct. Yeah,
and offer free refis and all that kind of stuff. So I don't have a favorite. I think DHI probably is mine.
DR Horton is my favorite. I own it. Yeah.
If I'm looking at one of them, and yeah, that would be my view too there. So, James, hopefully that helps, sir. Tick is gone pretty positive here. Qs have gone positive. SPY's gone positive. Dow is positive. Right up 0.5 point. So, Steve, the market just doesn't care. It can stay irrational. It can stay irrational longer than you can keep yelling at the top of your lungs.
That's right. and I'm long Tesla.
Listen, buddy, hey, listen, if we don't laugh at ourselves, we cry, right?
Of course. I hope nobody thinks that Howard and I are against each other. We've been friends many, many years. So we bring the show to you.
Man, you and H.
These numbers here this morning. I appreciate everybody. If you hit the like button, subscribe. I love this. It's good numbers this morning. And look, I'm still long Tesla here. So I think we're going to come out of this real quickly here and probably pop to the upside, and could be a happy day for us again. Yeah, there we go. Oof, look at that numbers. Oof, look at there. Look at that, baby. Come on.
Nice bounce back from gold here. Loving to see that.
Yeah. Tick now. Look at Tick now up over 300 here to the upside. Yeah.
Hey, Steve, I also was going to ask, are we willing to sell some of Quasar for $10 million from the White House?
I mean, hell yeah. Well, not I was
going to say, if they're buying quantum companies, we should be one of the companies they invest in. And I thought we should get that started. Mr. Bissett, if you want to come, Steve's number already. Give him a call.
It's not 10 million. It's way higher than that. But yes.
Well, remember, they're not buying it all. They just want a piece, buddy.
Oh, okay. I'll sell them 1% of it. Yeah.
Yeah. There you go. Let's see here. Bitcoin, like you said, holding up nicely. 109,540. Could see a little bit squeezed to the upside. We'll say Ethereum, Solana, much more still skewed with long positions and the amount of traders long, especially retail. We did see, Steve, last 8 hours, we've seen more spot inflows than perp inflows for the first time in months. So that is the first sign of positive news, I can tell you, across the crypto side.
Howard Greenberg, I just sold my Tesla for $20.72.
Nice.
Oh, yeah, baby. Oh, yeah. Didn't get nervous. Yeah.
Airline's starting to move up here, Steve. So maybe
that was an interesting question. I was asked by last week or 2 weeks ago on Schwab Network when I was in New York, what airlines should I give them? And I gave them AAL. And American Airlines, I thought, was the one that was the cool one to bet on. And there we are. Yeah. So, wow. Look at Tesla still pushing the upside there. 421.24 now.
Don't fade them off sometimes, I guess.
Wow. 422 now. Wow, I got a little too early.
I didn't listen to their earnings report last night. I heard he was very actively politicking for his pay structure there.
Well, I mean, I would too.
Yeah, I want to be a trillionaire.
Silliness. Dollar yen now, 152.61. I'm very happy about that. Keep that going. Sushi and sake, baby.
10 years still below 4.
All right. CrowdStrike CEOs on CNBC right now. Keep your eye on that.
Yeah. The two sectors in the loss, Steve, just like you said, consumer staples, consumer discretionary, the two sectors down today in the S&P.
Yeah, I mean, as everybody here knows, I'm very, very long on the materials. I think we're going to continue to see that problem pushing up here. So, yeah. Oh, look at that.
Steve, we haven't looked at UNG. We're getting towards the cold season. Any thoughts there as it sits at 13.01?
All right. There we go. So I love it. Let's talk about that. Con Ed, Consolidated Edison. That's the big player in New York City that does the weather. If it gets cold, you turn on Con Ed. All right. So let's pull up a chart of Con Ed, which is ED, ticker ED. Yes, but you can make fun all you want. pull up a monthly chart and you will see exactly what happens during those winter months. As long as you can hold it and you're an investor, we're at 101.75, probably pushing up to about 110. This is not one that you just willy-nilly. You can invest in this one, or you can buy longer term calls in this one. This is what I normally do. So because it's obvious, but yeah, keeping our eye here on Bitcoin 109.4. It's really holding up here, Howard. But the Dixie 98. But look, UNG is what the play is, natural gas, and it's expecting to be a very, very cold winter. I don't buy UNG because of contango. It burns. But if you're looking to play it for the, say like the month of November, December, it will pop up. It almost always does as people need it. And if we start to see issues in obviously in Ukraine and Russia being one of the biggest suppliers of European natural gas, that's another issue. Now, LNG is one that I do look at during this time period. LNG is Cheniere Energy. For those of you who don't know, I was buying Cheniere Energy around $25-30 a share. I still own a lot of Cheniere, and there's a lot of reasons I can't go into today. There's just so many reasons why I bought it back then and held it for so long. But this is one stock that is interesting to me because it is liquefied natural gas. We are actually an exporter of nat gas now. Look at that, the old days of selling. Yeah, Tesla now 421 here, flat. Yeah. Unity Software up 36.29 now, up 3% on the day. My eye is still closing in on Netflix, in FLX here. 11.21 as it's now up $8 on the morning here. So this was an interesting stock this morning. As it was getting
200 AMA is support for sure.
Yeah, the selling might be done here in Netflix. So for those of you who don't know, I was very bullish on Netflix under $700-800. When I got over 1,000, I called it for $1,000, and then I said, okay, 1,100, but that's about where I think it's priced right. And then of course it ran on up, and then now we're back down to pricing right again. So if you like it, then this, going into the holidays, here's one that I'm interested in, and it doesn't really trade. That's Hallmark, right? Are people going to be buying the Hallmark channel? And my wife said, no, it's on TV. I don't need to, right? Okay, then there's your answer, right? But the M&A with it's in that sector is still pretty high. So yeah, I'm liking that. Oh, look at this, Howard. I think we just had the best day now. Of people watching now.
I love it. Continue to hit those like, share, all those buttons for us. It helps us reach more viewers. We really do appreciate you. Steve, we got to talk a little bit, or I'd like to talk a little bit about what's coming up next. Intel on track tonight, trading about 36.91 here. They're bracing for 13.1 billion in revenue, looking for only a penny or two in EPS. That seems crazy to me. Option market implying about a 10% move. That's fireworks territory.
If Intel does well, if Intel actually makes a profit, and the president was right by investing into it, Intel could go higher. Intel could go higher.
I mean, I'll be listening to see what are the foundry losses trajectory, the AI server chip momentum, and whether the Trump administration's new national champion tone gives them political tailwinds. So we'll see what happens there. We also have one of the ones, my favorite, Ford, coming on this evening. Analysts see 47.1 billion in revenue, 35 cents EPS. The bullish angle is their record hybrid sales. The F-150 hybrid and the Maverick are flying off lots. The bear case is the Novelis aluminum plant fire that could cut production and cost about $500 million to $1 billion in lost output. Which way are you leaning on this one, Steve?
I'm with you on this. I think Ford Motor Company could do very well. I think you're right on this.
Beyond those two, Newmont is going to be there riding gold rebound, so we'll see what's going on there. Deckers and Nextracker should give us some read-throughs on consumer and clean energy demand. So it's basically earnings bingo tonight.
Again, to me, it's guidance bingo, right? What is the guidance saying? What are they saying about the future? I mean, great that your earnings did well, but if you're telling me that the future sucks, then I'm not investing in you that's what you're investing in, right? The future. You're not investing in the past. That's why we trade, and we trade because we think the market is wrong about the price. We think the price should be higher or the price should be lower based on what you think. And right now, it's. I think that, again, I'm saying this: the market is over its skis. So yeah, I mean, I can it going to go higher? Of course it can go higher. That's the whole point of markets and people psychology is what we talked about. But I also think that the market is fully valued. So this is the markets I like. I like trading these kind of markets when the markets are fully valued, because then if it goes up too much, great, take profit, short it, buy it again. Then you've got an understanding of where the balance is. But when you don't know where the balance is, it's a problem. So okay, let's just go buy and buy and buy and buy and buy and FOMO into it until you get screwed. So I don't want people to get screwed. Wow. Appreciate everybody out there.
Yeah, absolutely. Believe it or not, everybody, we do actually have some data today. At 10 a.m., we will get existing home sales. At 10:25, Fed Governor Barr will speak. And at 1 p.m., the tips auction. Steve, any of those interest you for what's going on? Existing homes is the one I obviously want to see.
Yeah, but I'll tell you the number. This is all about one thing. It's about tomorrow, about CPI. It's what everybody, the whole market is going to shut down for the volume in the market will go to like nothing to look at the CPI data to see where we are with inflation. And I think that's, and not just inflation overall, but to see where the inflation is too as well. And I think that's what you're going to look at and see, is the inflation going to be in a position where, is it autos? Is it groceries again, which we know that's been happening? Is it going to be, and James made a good question about the home builders. Is fixing my house up going to cost me more down the road? Probably yes. There's a lot of things. So CPI is going to be dissected and AI to death. So yeah.
Yeah. I mean, I think the number is going to come in good. Why? Energy is such a big part of it. And we know until today, energy had been at really, 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 really low levels. Gasoline's a big part of that number. So I do think it's going to outweigh everything else. I do think the markets will overreact to any CPIs tomorrow. So the narrative that's running, weak growth lets the Fed cut. Fed funds futures are still pricing in at least one more quarter point cut before the end of the year. So we've gone from 2 to 1. Steve, where are you on that one?
I mean, the Fed's going to cut. I mean, they don't have a choice. I mean, data dependent.
Is it going to be 1 or 2? You were calling for 2 recently.
2, yeah, still 2.
It's still on 2. Okay,
yeah.
That was what the question there. But we're getting steam as the algos kick off. So look at that move on the Qs here, Steve. That 3-minute chart, damn, that's a breakout, buddy. So definitely, as you said, upside today. It looks like people want to buy going into CPI data.
109.6 right now in Bitcoin. Like I took that profit off early in the morning. I went crazy and bought some Bitcoin, more Bitcoin. I added to my stacks, and then the part that I added, I took it off at 110.5 early in the morning. So I'm taking your advice on this Bitcoin that buy the dip.
It's got to break unless Bitcoin breaks and holds above 111.13 300 there. You're still fading any dip into that level.
I still think we go to 135 at the end of the year.
You'd have to tell me what we're going to do on, is the government still going to be shut down in Thanksgiving and some other things, because part of that, remember, a couple of the big things that we were looking for is that the SEC was imminent on approval of Solana ETFs, XRP ETFs. The Clarity Act was set to be signed by the end of the year. Those things are now very much at risk. And they are the catalysts that I do think we need to see some of it. And like you said, you just brought it up. So before we hit the final stretch here, I will mention that exactly what you said about loving to trade this is why we're not moving up. It's easy for the people who have the money in crypto right now to play the perpetual futures and to scalp both sides of this like you're doing. And they're doing it with the leverage that you're not using. So keep that in mind. Watch those perp flows versus the there. And then again, we had a little bit of outflows yesterday on the ETFs. We got to see sustained inflows. Institutions will lead the way also. We need those kind of runners to make it happen. Steve, as we get here a little bit closer to the end, tick is moving up. Advanced decline, baby, 3,000 to the upside. So We are at the highs of the day on advanced decline. We're hitting highs of the day on the Dow, on the SPY, and on the Qs. Where do you think we finish up?
Yes. Where exactly, I'm not sure, but we do finish on the upside. I mean, I think that there's so much momentum right now. I think the numbers are coming out. We're going and everybody's betting on the Fed cutting, and I understand that. So, but I think this Fed cuts are already priced in, right? There's a lot of issues around the world that we have not solved at all. Obviously, with Russia and Ukraine, the president's talking about Iran and Israel and Hamas, and that's been solved by what he said. Okay, hopefully it is, but I'm not. Right now, we're seeing silver right now 49.36 now. Apple up 0.25%. So this market's being held up by AI again in quantum computing here. So SSYS, one of my stocks that I do like here in the future, is now up 2.5%. Amazon is up 1%. Nvidia now up 0.6%. So you start to see some of the move. And USO now up 3.75%. If you bought USO with us yesterday, you're doing very well right now. You're up about 6 or 7% on oil. So congratulations there. Dollar Dixie now at 99 right now. Ripple 239 here. 1095 still on Bitcoin. And Tesla at the highs of the day, 423. So there is a theme still going on. It's still FOMO, and it's you're not seeing it. But if I look at Netflix right now, was getting beat up over the last couple of days. It was just positive a few minutes ago. It's now negative again. So there are institutions.
It's topsy-turvy again. Sell into those rips. I actually am going to be. This is the people watching the show today are going to be as confused as hell because I think we have a down day. I think that we are moving too quickly, too fast right now, and I think we start to fade off in the afternoon as people get prepared for CPI. That's just my view on it. So it's interesting.
Down, VXX is down 0.67%. It's flat. So there you go.
It's not moving too far. 18.25. It was up above 19 though, so it is moving down. But again, and we haven't had any tweets yet this morning from the White House. I think we'll get some this afternoon.
Of course.
Okay, everybody, for Quasar Markets Live, thank you for the 2,200 of you watching here live with us right now. We appreciate you all. Like, share, follow, get here tomorrow morning at 9 a.m. I'll tell you all the reasons why Steve is wrong in his views. Everybody have a great day. Steve, my best friend for 30 years. Have a great one.
Love you, man. See ya.